colleague Neeraj interviewed the ABB India's Sanjeev Sharma and TK Sridhar on the second quarter numbers. Let's hear that conversation.
How do you see the near term though, Sanjeev? Can I start with that? Because I saw some of the questions on the con call as well. People are, I wouldn't say worried, but thinking about the order inflow predominantly and where are we in the cycle right now?
Oh, well, first of all, thanks for hosting us here at NSE. And we are also very thankful for NSE for inviting ABB to be part of the 30 years journey being listed on NSE. And you know that it's our 75th year of manufacturing in the country. So that means we have seen number of cycles and different stages of India's development. Now, when it comes to specifically to your question, we are coming into this quarter with a very strong growth in last 5 years. So if you see, we have seen extraordinary growth in orders, revenues, and also what we have delivered as a profitability to the market, and also have built a very strong balance sheet to be able to do the organic as well as inorganic expansion possibilities for us for the business. Now, as far as at this point of time, if you see our portfolio mix, we operate in MTO and MTS, which is made to order, made to stock kind of products. That's a flow business which gets channelized in the market. We see it's a pretty robust business for us. Second part is the ETO, engineer to order. That business is the subsystems we again produce ourselves by using our own component. Again, that market is quite good for us. When it comes to systems order, which generally deal with the large capex and large industrial kind of heavy industry solutions, that's where we are seeing a bit of a cyclic nature at this point of time, and that's where we see some kind of slowdown. The projects are still there, but there's a delay in decision making on the customer side. I think that's how we are seeing the mix in our portfolio.
Is it possible to kind of preempt based on how the cycle is right now as to whether these delays could be longer tenor in nature, simply because there's a bit of a flux, right? Uncertainty around tariffs, and even if they don't impact you directly, it might impact the minds of your eventual customer right now who is giving you the orders currently.
So that's what happens whenever there is uncertainty in the market. And naturally, there is a bit of a concern, and that concern flows and flows to the market, and also starts reflecting on the amount of traction the customers have in this segment. So see, we have our customers who are the end users in the country. We also have machinery builders who are exporting to different countries. So what happens is when you look into that mix, there is a general slowdown till the market air gets cleared. So I believe, given we have seen how the tariff negotiations had taken place between different countries and the country in question, I believe it's a matter of time India will also find its own settlement, and that air should clear.
Sridhar, in that cycle that goes on right now, and wherever you might be, depending on how you and Sanjeev believe about this, what does it do to costs and thereby to operational metrics and margins particularly? Because here too, there has been a bit of a pullback, right? I mean, we enjoyed heady days of higher teens to where we've right now come to in quarter one.
I mean, this is a very interesting question, Neeraj. I think it's a time back where we need to sharpen our pencils in terms of cost, in terms of sourcing the material, and also in terms of how do you really play with the mix of the offerings which you go to different markets. And I think this is something which we need to come back to the blackboard to say, guys, given the situation, what you need, what you have to deal with, and an uncertainty about how long it could prevail, right? We need to really do a bit of a homework to make sure that in the next few quarters, we're able to correct the situation as what we see.
Yeah, but does it enable you, or does this homework enable you, because you are prepped for it in some fashion, right? Is there some sense of what's the kind of band that you might stay in, and is there a probability or a possibility that you might end the year at the lower end of the band if you're giving out a band in the first place?
So I think we had given a band, let me be honest. We said we will be in a band of 12 to 15%, right? So on this quarter, we had a bit of one-offs which was there, and that's not going to be there in every quarter. So our endeavor has always been there in a predictability standpoint between in these bands. That's where we see that we should end up the year, provided we have good revenue offtake and we don't have these type of topics of QCOs, other things impacting us negatively.
Got it. So, Sanjeev, have you wrapped your head around the uncertainty of tariffs and what does it do to your business? One is, of course, what happens to clients. But for ABB particularly, you are in Europe. Europe has had, let's say, a heavy hand of sorts, not quite expected, but 15%. India is facing that too, per se, in some sense, when you consider US as an end market. What does it do to ABB's businesses? Because I think ABB as a lot was trying to think of doing work in India for the world as well, right? Does that change it? Does it make it better? Does it make it worse?
So as a first principle, we are a multinational company operating in India for last 75 years, and our prime focus is Indian market.
Right.
So we want to make sure that whatever journey India is taking, we have our products which are localized, and we are able to offer best-in-class product for nation building as well as industry and infrastructure building. And that's prime focus. And that reflects in our books. 90% of our books are domestic.
Yeah.
That means that's how the customers are. Only 10% are exports. And that too, only a very minor part of it is connected with the North American market. So as such, we don't see direct impact in terms of our direct exports with the tariff situation. But we do have end users and the customers who their products go to European and as well as the American market. And the machinery builders who's finish their machines and they send it. And I think that's something which we are watching closely, whether it's a temporary kind of phenomena, which we believe will be going to be a temporary phenomena. Once the air gets cleared, I think then they will be shipping more, and that will be shipped with more with our products. Yeah.
Okay. And Sanjeev, the last couple of questions. One is particularly with regards to ordering. When I looked at the kind of answer that you gave me as well as your results, the short cycle orders seem to be in place. This uncertainty around the long form orders, kind of the tech sector kind of not suffers, but is going through that period right now wherein clients are not giving long dated orders simply because they don't have clarity around how business will be, right? You've seen some of these cycles. Maybe this cycle is different than the past, maybe it isn't. How long does this typically last? When do you believe stability in the long form orders will come back?
So as far as as a starting base, we are sitting with the highest ever backlog. So which crossed 10,000 crores. So that gives the certainty of...
But your revenues are also high now, so that's the problem.
So that gives the certainty of cost absorption in the coming quarters, right?
Okay.
So that means taking the course and delivering the expected performance is Sridhar. I think we feel pretty confident about that band. Now, when it comes to the fresh orders and book-to-bill orders, I think this uncertainty will clear itself. And we see more traction on the base orders in the country because as the tier 1, tier 2, tier 3 markets are expanding and more products are getting channelized into infrastructure projects, real estate, the other projects which are coming in the data center, etc. I think they remain fairly robust in the country. I think the heavy industry, I think there's a bit of a muting there in terms of how much capex formation is there. But then again, it's cyclic in nature. So when we look forward, as such, if I look into short to medium term, I'm not very concerned about how the market is going to behave for us because our orientation is very domestic in nature, right? So as long as India grows 6.5%, 7%, on back of that, we have grown 22% CAGR in last 5 years. So if there is a bit of an adjustment there, yes, we will take it. And we have seen many cycles in past, and I think we will deal with it as it comes.
But difficult to call the timeline to this, right?
It is difficult to call timeline. I think we don't hazard that guess. But the important thing is we really make sure that we engage with the customers, serve them well in good and the slow times. And I think that's our mantra when we engage in the market.
One last question, Sridhar. Pricing per se, could there be challenges on that as the order inflow might slow down a little bit? I'm not saying it's slowing down for you as yet, but if it slows down, could pricing be a challenge or would you maintain pricing at the cost of losing our orders?
So I think when it comes to pricing, so as what Sanjeev was alluding to, so you have the flow businesses which are clearly sort of reflecting the market dynamics into that. So therefore, there will be a pricing impact over there. But when you come to large projects and systems, you already have certain pricing mechanics built into that. And so it follows that particular pattern. But with 70% of our businesses coming from flow businesses, there would definitely be adjustment to the prices as we go around this particular time.